Hello everyone, this is Roy Bingham. I'm here with Brendan Mitchell-Cheesebrough, and we're looking forward to presenting about our market forecast for the global cannabis industry with a particular focus on United States and Canada. We've got a lot of people joining. I can see it's fun, you always see the meter as people are joining on. So let's give them just a minute or so as more people join. But thank you very much for sparing some of your precious time to come and join us. We hope that we can make this interesting and useful, and that you're going to come away with insights that will help you as you build your businesses, and build your businesses in a much more tricky economy than might have been the case a couple of years ago, of course. And so everybody has been making adjustments, and that will be the sort of thing that we reflect on a little bit in the course of this market forecast. And I want to, apologize. This is an English accent. I was just reflecting on the fact that I have lived in the United States now for 29 years, but you've probably heard a lot of English accents over the last 10 days or so, and I'm going to be mercifully brief and try not to inflict it on you too much. Also, I'm told my accent sounds as much Australian as it does English by now. Okay, I think it's probably time for us to get started, and those that will be signing on will be able to catch up with us. So welcome to our fall 2022 market forecast for the global cannabis industry. We are, this is, market forecasting is one of the things that brings together the various services of BDSA. So in passing, I'll mention what those are, but I know that many of you are very familiar with our services as clients of BDSA. But the focus here is this comprehensive high-level picture, and I emphasize high level because you're used to a lot of detail with us, of where the cannabis markets worldwide are going in the next 5 years. The focus, as I said, is the North American markets. We use consumer growth, sales growth by channel, and projected legal sales by product and category. Of course, we won't be able to cover all of that in the course of this presentation, but those of you who are subscribers to our service are familiar with the level of detail that we're able to bring even to this global market forecast service. We also, of course, have our retail sales tracking service, and that product offers the granular detail on 13 different adult use and medical markets in the United States, and gives visibility into category sales, unit sales, the leading brands and products, as well as leading brand houses across all of those tracked markets. That's probably what we're most known for, but all of that information goes into our market forecasting and analysis. Rounding out our suite of data products, of course, is the consumer insights that we update twice a year, and that gives us a qualitative and, as much as possible for an analytics company, a quantitative look into consumer demographics, psychographics, purchasing behavior, consumption drivers, and trended views of all these important data points. And we go back 4 years with our consumer insight. So rather fascinating to see the evolution of consumers over that period. Now, looking at the components of our forecast, we use qualitative information, as I mentioned. We obviously have to take into account regulatory changes, the consumer insights findings, as well as the quantitative data such as our retail sales tracking. Government sales and tax data is used quite often as well. Forecasts of medical spending are based on patient counts, in-state legalization dynamics and neighboring state market movements, and state and federal government actions. Adult use spending forecasts in markets without BDS retail sales tracking are based on estimates of the population of legal adults that are consuming, derived using the long-running annual survey known as SAMHSA. And at the end of the day, we end up with a granular view of the forecast size of the industry for every state, and territory, every Canadian province, and all of the significant international markets. Our forecast is broken out by channel, medical, or adult for all markets, and includes key demographic data such as projected consumer participation and patient counts as well. And it includes category forecasts for all US and Canadian markets. So that's the background. Moving now into our global cannabis market forecast. Here you can see that US legal cannabis sales have seen sales growth in key emerging markets, declines in mature markets in 2022, and new market openings have continued to drive growth with new markets in Montana, New Jersey, New Mexico, possibly New York, adding adult use sales in 2022. Legacy markets such as Colorado, Oregon, and Washington expected to contract, yes, diminish in adult use sales as these markets continue to be plagued by oversupply issues. California is forecast to reach 4.5 billion in 2022. That's actually a decline of 13% from 2021. Medical markets are also experiencing declines in certain states as their adult use counterparts get going, and with many patients seeking access and products in neighboring markets. Now, Canada is growing strongly, but slowing in its growth. Ontario is the dominant province there. And Cannabis 2.0 products are gaining share. Ontario continues to drive growth. It's gained 4 percentage points of the national market share as the adult use market nationwide is expected to grow 15% to 3.9 billion in this time horizon. International growth is really led by Germany and Mexico. Mexican officials are looking to have legalization efforts in place by 2023, while in Germany, adult use regulations could become law by the end of 2022. We expect sales to start in 23 and 24 respectively, given the passage of those changes. So that's the summary of the drivers of worldwide legal spending going from 33 billion in 2022 up to 57 billion in 2026, which is an impressive compound growth rate of 14%. And of course, most any industry would be very excited if it saw that over the next 5 years it had that kind of compound growth prospects, despite my cautionary comments about the US markets, in particular the mature US markets. If we look at the top 10 contributors to growth, I think this is fascinating to include both countries like Germany and Mexico, as well as states and provinces. You can see the launch of legal sales in Germany and Mexico will provide a huge boost to total sales growth by 2026. But the US markets still are the primary driver of growth in the cannabis industry. Florida has seen some of the strongest growth of any mature medical market in 2022 so far, and is forecast to be the top contributor to US legal sales growth and to global sales growth, driven by their large population of 21 plus million, high rate of consumer participation in the market. The emerging markets, as you can see, of New York and New Jersey are forecast to be top 10 contributors to global sales as well, outpacing much more mature markets such as Washington, Massachusetts, and Colorado. While Illinois' adult sales launch was plagued with supply issues, very limited retail availability, all signs point to these problems being fixed soon, and the state is expected to see around 13% total sales growth in 2022 to a total of about 2 billion for the year. The state expects those 185 additional correctional retail licenses to be awarded and opened by 2023, addressing a statewide retail shortage that has dampened that earlier growth. So looking at a little bit more detail at the US legal spending market, you can see 2021, a $25 billion market, growing in 2026 to a $42 billion market. That's a compound growth rate not to be sneezed at of 11%, a little slower than the global numbers that we just presented, with, as you can see, 7.8% growth in 2021-2022, which is, of course, the lowest growth rate that we have seen, but we expect a pickup in that growth rate for 23, 24, 25, as you can see in the 12 percentage points of growth range. Growth in the new and emerging markets, primarily in the Midwest and the East Coast, will drive a lot of that. Due to the continued price erosion and other factors I mentioned earlier, including California, Colorado, Oregon, Washington will experience, unfortunately, declines in sales. Newer markets such as Montana, New Mexico, of course, are contributing to overall national growth, but we're still seeing softer openings than anticipated as consumers face uncertainty. Prices remain high in certain markets, and expanded access may have softened consumer demand. Medical markets, as I mentioned, have experienced declines when adult use market is present or nearby, such as in Michigan, Arizona, and Illinois. And even in a medical-only state like Rhode Island, you've seen declines probably because of the opening of the Massachusetts adult market. BDSA believes the trend of softness and declines in the industry is partially due to inflation and other macroeconomic factors, as well as steep price erosion across markets that have contributed to those dollar declines. Recently launched markets, of course, are less impacted by those factors and those prolonged market pressures. So Michigan has continued to grow. Its adult use program should hit 1.9 billion, up from last year's 1.3 billion. Illinois is expected to continue to expand with those 185 new locations, greatly expanding the footprint for that state. New Jersey, of course, launched back in April. Its adult use market is going to grow very strongly as well. And while timing on New York is a little unclear, obviously, there's going to be considerable growth there as well. And the combination of New York and New Jersey and Connecticut means a very large percentage of the population in the United States are going to have proximate access to the adult use market, and they will add potentially 4.5 billion by 2026 to that number of 42 billion. There is, of course, a challenge with regard to prolonged rollouts and the existing illicit competition, which, of course, the illicit competition benefits from the lack of regulation and a more lenient cost structure and tax structure as well, of course. So we are, of course, aware and adjusting for that in the case of markets like New York in particular. And it is, of course, a factor in every other state as well. We are not anticipating federal cannabis legalization in the near term. It would not necessarily change the pace of individual state legalization and availability in this time period. It would, of course, help with financial relief in the form of banking regulations and taxation relief, but not necessarily drive a massive increase in consumer sales. Several states will launch adult use markets in 2022-23, including Ohio, New Jersey, New Mexico, New York, as you can see. Those contribute more than 7 billion of the 22 billion in new sales that we forecast to be added between 21 and 26. Once New York and Connecticut launch adult use, the entire Northeast, except New Hampshire, will have fully open adult use retail. Florida, which is one of the last states that can legalize through a ballot measure, is expected to pass adult use legalization in the next couple of years. Looking here at the eastern United States specifically, you can see compound growth projection from 4.2 to almost 9 billion of 20% across both adult use and medical use, as you can see, with virtually all of the growth coming in the adult use. That, of course, is a very large driver of overall growth, and we expect that sales growth to be 35% to 5.6 billion in 2023, and then go on to that 9 billion number. If we look at an individual market, despite some rules and regulations that make New Jersey's adult use market a little different than other states who've implemented adult use sales, legal consumer adoption is expected to grow, with its sales forecasted to more than triple between 2022 and 2026. And in just 7 months, of course, this year, New Jersey sales are expected to reach $700 million. And by 2026, around $2.3 billion, which is a growth rate of a very impressive 35%. New Jersey's market, of course, benefits from being the first mover in the tri-state area, as New York and Connecticut had initially planned to launch around the same time, but are moving more slowly. That speed to launch doesn't just help protect New Jersey's fledgling cannabis market to retain resident buyers, it's also likely to attract consumers from nearby New York City and its surrounding suburbs, and even some additional out-of-state visitors from the Philadelphia and Delaware Valley region. Moving on now to take a look at Florida, that is a very important market. It's expected to be, as I said, the top contributor to legal sales growth worldwide by 2026. The medical-only market blew past the billion-dollar sales market, growing 81% to 1.8 billion in 2021. In 2022, registered patients have now crested at 750,000, which is 3% of the state's population. The dispensary footprint has expanded very significantly, and average spending per patient has also increased significantly. Given the strong month-to-month sales growth and the fact that the state surpassed that billion-dollar market by the first half of 2022, we forecast medical spending in Florida to grow 36% this year to 2.4 billion. As I mentioned, adult use legalization in the next 2 years is possible, as industry interest and grassroots movements have combined to push legalization in 2024 to that state of 21 million people. And we're forecasting a substantial market in sales by 2026 of about 1.6 of that total of 4.6 as adult use. If we look at US legal spending in California, of course, it's a very different story, as I mentioned earlier. After seeing strong growth during the second half of 2020 and the first half of 21, sales in California were tepid in the final half of 2021, have continued to decline in 2022 so far. The California market, as we know, is burdened by high taxes, regulatory complexities, and price compression, and, let's face it, the most established illicit market in the country. California regulators are beginning to address some of these issues, streamlining the cannabis agencies, strengthening efforts to combat illicit growers and distributors. But the effect of these efforts and the recently signed cannabis reform bills have yet to materialize. The state reporting indicates first half 2022 sales declined 11% versus 2021, a loss of $270 million. of top line. BDSA forecast sales totaling with a reduction of 13% to 4.55 billion for the full year of 2022. In the out years, we predict a return to growth by 2024 due to regulatory adjustments such as additional adult use counties and municipalities and other current government efforts on the regulatory and illicit fronts. I mentioned the Canadian Cannabis Market Forecast is very important to this overall picture as well. We forecast total legal cannabis spending in Canada will grow by 12% to 4.3 billion in 2022. Retail sales actually shrank about 2% in the first quarter of 2022, but rose again by 9% in the second quarter. Medical sales in the first quarter rose 2% after 6% of decline, so there's a little switch going on there. Total forecast for 2022 is about 10% less than we had thought some time ago. Medical sales are forecast to decline about 9% to 290 million in 2023. Adult use sales are forecast to grow 14% to 4.5 billion. And the provincial share, as I mentioned, is stabilizing, with Ontario's share up 4 percentage points in the first half and Quebec's down 2.5 points. Edible and vape products share is making small gains in the year to date. Edibles reached 8 to 9% market share range in the main provinces. They're still very limited in Quebec, with only a share of about 2%. Vapes reached about 19% in Alberta, 15% in British Columbia, 16% in Ontario. They're not allowed in Quebec. So flower has continued to lose a little share, while pre-roll, as you might expect, has gained. Looking at the international cannabis forecast, here we can see, excuse me, the international, you know what, I need a drop of this. International market legal sales are expected to grow almost 50% to 2.7 billion in 2023 as more markets come online, and sales are expected to almost double in 2024 to reach 5 billion. Germany is the big highlight. The medical market has been sluggish, driven by non-reimbursed prescriptions, etc. Adult use regulation still seems likely in the 2022 to 2023 timeframe. And we forecast sales to begin in 2024, contingent upon that legalization and regulation. It seems like all of Europe is holding its breath and paying attention. The population, of course, of Germany is twice the size of California, so the market could be huge. We forecast 1.3 billion to be the first year of adult use sales. Mexico, also very important. The June 2021 Supreme Court decision cleared the way for eventual adult use sales. Draft regulations were circulating by the end of 2021, but there's been little apparent progress so far in 2022. We still forecast adult use sales beginning in mid-2023 and reaching about 150 million that year, assuming the regulation does pass in 2022. All other markets have been updated based on actual patient and spending data is available, with patients often moving to private sources, things simply not happening quite as quickly as might have been expected in terms of growth in countries like the UK, for example. So thank you very much for your time and attention. I hope that kept it. I know many of you are very busy. We are open to questions. I am joined by my colleague, Brendan Mitchell-Cheeseborough, our insights analyst. We were just discussing that Brendan has been studying this market with BDSA for 6 years now. A great track record with the company, is a font of knowledge. So if you ask questions, I'm happy to try and answer, but the chances are Brendan's got a lot more detailed insight. And you can, of course, submit your questions through the question tool.
Thanks, Roy. We also have Andy Seeger here joining us, so I might kick over a couple of questions to him if I need some more clarification. We had a really good one here from Jerry Jones.
Happy to have Andy here and fully intact after his bike accident. Or nearly fully intact, Andy. Go ahead, Brendan.
Really good question from Jerry Jones. Isn't a reduction of sales in the West due to COVID checks, et cetera, not being available in 2022? That's definitely part of the issue. We've seen the general macroeconomic situation affect a lot of different markets. Part of this is due to things like high fuel costs, inflationary trends. So we think that the lack of free money flowing around probably influences people's shopping decisions. But with the sort of price pressure that we're seeing in the market, people still have savings that they can get from the illicit supply chain. And when you look at the amount of retailers per capita, California is behind a lot of other markets like Oregon, Colorado, as far as availability. So it's one of the issues, but not the main one that we think is driving this decline. All right, sort of going down. So can you discuss, another follow-up there, can you discuss the effect of the drop in wholesale prices in the West and the slowdown due to the price drop? Andy, do you think you could maybe jump in and give some insights on this, sort of where we think Western markets are heading, whether they're really addressing the problems of oversupply and wholesale prices, and what things might be done? I know that there's been some moves in Oregon and Washington with regard to that.
Yeah, I think first of all, we have to start by looking at the states as a couple different segments, right? You have the newer states in Nevada and Arizona that are having some of these issues come to bear very early in their cycle versus the legacy states that are still dealing with a bunch of issues in oversupply. And there is some movement. Oregon, Washington having some moratoriums on some license structure. California is very much signaling that they want to do better, but I'm not sure how much impact many of the things Gavin just signed will impact that market. And then the other two new Western markets in Arizona and Nevada that had, really high sales initially off of high per gram sales, but with very kind of minimal rollouts in terms of medical only expansion in AU in their first year, and now seeing pretty rapid declines in their medical markets, and then the price reductions in their adult use markets coming to bear as well. So just some very rapid maturity in those markets in terms of price compression has really advanced where they are. We're seeing a lot of unit growth in some of these states, but that's almost completely being washed out by the price losses.
Thanks, Andy. A couple of good questions from Jimmy. He was wondering if this study includes hemp or just marijuana. This is just covering cannabis, so marijuana through the dispensary channel. BDSA does have a separate CBD forecast that has a lot of different moving parts, so we try and keep it separate from the cannabis forecast. Hemp CBD is moving through groceries, beauty stores, convenience stores, health food stores, so there's a lot more channels to keep track of. I think there's a lot of interesting stuff happening in the hemp market, and we've sort of seen that with the proliferation of Delta 8 and all these other hemp-derived THC analogs that are popping up in a lot of illicit states. So it'll be interesting seeing how that develops in the coming years, but we do have a separate product covering CBD forecast.
And sometimes they merge, like when Minnesota just accidentally legalizes grocery sales.
Yeah, that's a very good call out. Yeah, and that was surprising to a lot of us. A question from Tom Adams. Can you give some sense of how unit sales rates have changed compared to spending? In other words, how much of the softness is price declines versus soft demand? We think that a big deal of this is price declines as far as change in overall dollar sales. There are still some brands in legacy markets like California, Colorado, Oregon that are seeing high unit sales increases, but just with the margins that they're having to deal with at the wholesale level, having a hard time to stay afloat.
It is dangerous to generalize, as Tom Adams knows, of course. You know, it is very much a state-by-state situation. And I'm even wary of generalizing about the big sort of 6 states out west as well, because there's unique characteristics to each of those.
Yeah, and as far as demand, our consumer insights product consistently show that we have increasing consumer participation, and it's not showing that the demand as far as, you know, volume of cannabis per consumer is really going down. We think that some of the softness, especially in markets that have difficult retail landscapes, is just due to easier access to illicit cannabis compared to legal supply chains, and just the price savings that consumers get. Right. Really great questions. Thank you, anyone. Another one, is there inclination for price drops due to oversupply or lower quality in legacy markets like California? Yes, we are sort of seeing that. We are seeing average retail price in a lot of markets crash. There are a few exceptions. Limited license markets generally, this is, you know, speaking in generalities, do have slower declines in average retail price. So that is one thing that we are noticing.
We are also, I think, seeing consumers sometimes choosing smaller products or lower price products. And so average reduction is not just a reduction in the price, but it's a decrease in the weekly spend based upon buying a smaller product.
Another good one. Can you provide a high-level breakdown of the 1.8 billion in international cannabis 2022 sales? Andy, would you like to jump in on that one? I know that Mexico and Germany are forecast to be some of the bigger ones. Also, the UK is getting its medical market up and rolling, but I was wondering if you could get some more context there.
Yeah, you hit the major ones, along with what we think Israel might do. There are a number of medical advances in that industry as well. So it's what you would think of out of the European communities that are actually facing some sort of changes, and the European communities that are not, including also some South American countries that might be looking at it. You know, the international market is rather strange. Lesotho in Africa has an agreement with, I think, the Netherlands to do some shipping for their medical research and all sorts of things. So yeah, it's mainly those markets that you hit upon, and then a few others.
I got to say, it's been, you know, as a European, a former European, I suppose, it has been disappointing. I was talking to a client in Spain a couple of weeks ago. We just said, well, we're going to look back to the enthusiasm we had 3 or 4 years ago, and it just hasn't really materialized into a significant medical market, and much more of a pharmaceutical attitude. But the big thing now is that talking about adult use is no longer a dirty word. It literally was, oh, don't talk about that, you'll scare away the regulators. Now it's on the table in Germany, and that might be a significant sea change in attitudes.
Good question from Katie. How does the cannabis market compare to the alcohol market in times of uncertainty? So one thing that we're consistently seeing is that when we look at our consumer data, cannabis is a sticky good, much like alcohol. So when we get to these times with inflation, high prices on fuel, cost of living going up in a lot of places, cannabis is one of the last things that people cut out. But it doesn't necessarily apply to legal cannabis. If illicit supply chains are there and people can save a couple bucks from going there, they might do it. So that does have an impact on the forecast that we presented today.
And in our last survey, I believe 60% of consumers cited medical as being a motive behind their consumption. So it is still a very important factor. We get excited about terms like adult use, but we have to remember that the large majority of people have a medical application, whether or not they purchase in an adult use store.
Yeah, and there is a lot of crossover there. They're not mutually exclusive. Somebody might characterize their consumption as primarily recreational. They mostly use it to unwind and relax after work, but they also have some health and wellness reasons that they consume for. Any insights on form factor dynamics and evolution of concentrate segments across markets? This is pretty interesting. We are seeing some general trends crop up across the board, but there are still differences that kind of come back to regulation when it comes to new markets being launched. Generally, what we expect as far as concentrate share across markets is the vape sector taking up roughly 20 to 25% of dollar sales consistently once markets mature. Dabbables being slightly lower. Dabbables do definitely have their appeal, especially to the connoisseurs, more experienced consumers. But we expect those to be about 10 to 15% of dollar sales across markets. There are exceptions. We have markets like Pennsylvania, which are much more heavy on the flower. They're seeing, month to month, over 40, 45% share of flower, which is higher than a number of other markets. Some markets like California are heavier on vapes. And some of this comes back to having a more mature consumer base, having them be around these products, know about the different form factors and their benefits. Some of it comes down to regulation, like Pennsylvania limiting access to more edible form factors than other states. So there are general trends, but it does shift a lot when you look at specific markets. This is one that maybe you can tackle, Roy, from Daniel Erickson. How do you think mergers and acquisitions? Pardon?
You mean it's an easy one?
How do you think that mergers and acquisitions are impacting the market? And do you see this continuing and creating a separation of mass cannabis and boutique or niche providers?
Yeah, very interesting question. I think it's worth reflecting on the fact that we're at a very early stage in the evolution of the industry. As some of you know, I came from the natural foods industry before this and was in that space for about 20 years, starting off there when Whole Foods had just 19 locations. And so now what we're seeing, of course, is the emergence, perhaps, of the Whole Foods, who knows who it will be, of the cannabis industry. And that can lead to all kinds of consolidation in terms of consumer product offering as well. I don't think it's a major factor yet. I think that we're seeing the mature states have a tremendous number of products available, a tremendous number of brands. Obviously, we've got a little bit of a different model going on in the more recently legal states and up in the Northeast, for example, where you've got limited number of licenses. So you already have a more consolidated market, which is going to consolidate yet further. But you're still talking about thousands of different products being available to consumers. And the most successful brands will emerge in due course. Also, of course, those bigger companies are in a position to do more R&D longer term and do more branding and marketing longer term as well. In order, we expect to develop better products and better appetite for those products, and therefore reach a broader consumer base. We're already at a very broad consumer base, but there are still, people who are sitting on the fences at the moment because they're not seeing anything yet that looks like a kind of consumer packaged good that they're expecting to see. So it will be fascinating to see what happens in terms of mergers and acquisitions and the emergence of major players with ultimately more limited product ranges.
Thanks, Roy. Here's a good question from Brandon King. Does the price compression in Western US states project to beat the illicit market, or is there a sense that the illicit market is experiencing parallel compression? I do think that the illicit market in most of these mature markets is experiencing parallel compression. It's important to note that when we talk about illicit suppliers, they definitely do have a leg up, not having to deal with IRS 280E, not having to deal with taxes and compliance fees, but it's not like they were making $4,000 a pound off of their crop last year. They've been dealing with, falling wholesale prices, and I think that we're going to see a lot of these illicit suppliers, specifically, the small, the medium-sized growers in states like Oregon and California, sort of move on from the industry because it's going to get to a point where the profitability does affect them, and them being able to attract more buyers, whether they're in state or out of state, it's eventually going to affect them as well.
I think also another factor there is the prevalence of outdoor grows out west as well, and this being the season, as it were. But in general, you know, it's easier to have a large illicit market out west.
Yeah, that is true. And, you know, there's been a lot of talk about the illicit market in New York over the past year or so, with, you know, people selling cannabis pretty openly on the street out of food trucks or in bodegas. And I think it's important to note that once we see more cultivators come online and get a few cultivation cycles under their belt, some of that might correct as well. We might see some of their competitiveness on price point be eaten away by regulated retailers once they all get up and running and the retail landscape starts to develop. Is there any indication?
For one or two more questions, Brendan?
Yeah, I think this last one is really good. From Bianca, is there any indication consumers are swapping alcohol for cannabis? Do you have any high-level insight about how the two could impact each other or interact in the market in the next few years? So we have a good amount of consumer data that covers the interaction between alcohol and cannabis. We don't have anything that suggests very clearly that consumers are swapping alcohol, so ceasing alcohol consumption because they picked up cannabis, but co-consumption, it has picked up quite a bit. Important thing that will probably put some people in the alcohol industry at ease is that the need states and consumption occasions for cannabis are usually pretty different. When we look at how people consume cannabis, most people consume cannabis either alone or in a small group of like 2 or 3 people. And as Roy said earlier, a lot of cannabis consumers are consuming just for health and wellness reasons, or primarily for health and wellness reasons. So there isn't really too much of a clash when you look at alcohol consumption occasions, which are more focused on group activities or celebration or sort of high energy events. There are a few where cannabis does present a limited threat to alcohol, but I don't think it's going to be people swapping alcohol for cannabis entirely. I think it might be an increase in co-consumption, which just because, you know, the entourage effect of having, you know, the alcohol cannabis crossfade, that might lead to slightly lower alcohol consumption when they do co-consume.
I think there's also a independent effect that sort of works together to change things as well, which is that the younger demographic have tended to consume less alcohol than older demographics recently. And as they become a more significant part of the population, that's a factor, combined with the fact that the younger demographic tend to be earlier adopters of cannabis consumption as well. They may well be quite independent of each other, but that's just a trend that if you could kind of combine it together and say cannabis is influencing alcohol, but I'm not sure that it is an influence. I think it's just a trend, or two trends.
Yeah, I think that's important to call out as well. All right, thank you so much for all these amazing questions. Roy, thanks for jumping in, and Andy as well. Just a little piece of housekeeping. We will have this presentation, the deck and the recording, posted on BDSA by end of week. So if you're curious about any of the data points included here, feel free to go to bdsa.com and check out the whole presentation in its entirety.
And please do reach out to your account manager, or if you are not an existing BDSA client, by all means contact us. We'd be delighted to speak with you about our services and see there are many ways that we may be able to help you as you plan and build your businesses. Thank you very much for joining us. Thanks for taking the time, and have a great day.